We analyzed 2 years of real estate data, town by town, so you don't have to. I'm Ray Micas, and this is the Greenlight Real Estate Annual Market Report. Okay, I'm just gonna come right out and say it. This real estate market is in a transition. We're seeing a shift that's getting us much closer to a real estate equilibrium than we've seen in a long time. We've broken down the sales data, so number of sales, median sale price, days on market, different price bands, how the market is performing in each of several different high school districts in Vermont, covering Orange County, Washington County, and Chittenden County. So we're gonna get deep into a lot of different categories and a lot of different sets of data, but just overall, big picture, here's what the market has done in 2025 in contrast to 2024. Number of sales was up, ballpark 12%. Number of days on market, right? How long it takes from the time a property gets listed until the property gets a contract on it is up significantly, almost 40%. Median sale price, this one is the one that people really zero in on. Median sale price across those 3 counties went up just about 1%. From 2024 to 2025, which is the lowest increase we've seen in several years. Other things that are always interesting to people, the number of cash sales is right around 25%. So if you're thinking everyone's buying with cash, cash is pushing around all of our financed offers, that's not true. Another interesting piece of information, whether you're a seller or a buyer, number of new listings. In those 3 counties, we saw an increase of right around 13% in the number of new listings. So we got more houses on the market, we got more houses being sold, slightly higher sale prices, and it's taking longer for them to sell. That's kind of a mushy market. That's what I'm talking about when I'm saying we're in a transition. Things are not black and white anymore. One piece of data that I think is really good to see is that the number of sales is up. So across these 3 counties, we're seeing around 13% increase in the number of sales. And here's why I think that's a great thing. First off, more people buying, more people selling, it frees up the market. Freeze, F-R-E-E-S. What I don't want to see is a market that's frozen, where people aren't able to get into homes or sellers aren't able to sell. It's a flow of energy. Right? And so a buyer buys a home, that frees up that seller to buy a home, that frees up that seller to buy a home, and it moves all the way down the path. So for me, seeing the number of sales going up is always a good sign. We've got buyers, we've got sellers, and they're being successful. So that number of sales, fantastic. Now, town by town, listen, the more numbers you have, the more accurate your data is gonna be. So we're talking about 1,800 sales across the 3 different counties. That's one thing, that's gonna give us that 32% increase. Town by town, most of the towns had increases in sales. There were a couple of towns that had decreases in sales. So it's really important, location, location, location. It's really important whether you're a buyer or a seller to get the granular data on the town or towns that you're most interested in. That's gonna be relevant. If you're buying and you're buying in a market that has substantially more sales than the year before, that'll tell you something different than if it has only a little tiny bit more sales. And on the selling side, same thing. You wanna have that data, you wanna have that conversation with your real estate professional to make sure that you're being strategic about your decisions. Okay, so one of the most talked about pieces of data when we talk about real estate is the median sale price. And I gotta tell you, if you look at these 3 counties, it's a little bit of a snooze fest. Sales prices have gone up just about 1% over the last 2 years. But I know something that you don't know, which is when you go a little bit deeper, this town by town data tells a different story. Some towns are gonna have slight decreases in median sale prices. Some towns are gonna have no increase at all. Some towns are gonna have 10, 15, even one with 17% increase in median sale price. So you really owe it to yourself to get the local information from someone who's here in the area, who knows the town, knows the schools, knows the streets, knows the stores, knows the people, because that's what's gonna help you know what your real estate market is acting like. Let's talk about average days on market. It's taking about 30% longer to sell homes than it did before. That's a nice piece of information. What does it really mean though? Here's what it means. If you're a buyer, you have a little bit more time to think through what you wanna do. So no longer do we need to see a house on the market, go to it that day, make an offer, get rid of all of our contingencies, and try to get into contract in 3 or 4 or 5 days. There are advantages to getting in soon. We just don't need to be quite as frantic as people thought maybe they needed to do in the past. So here's the advantage of getting in soon. You might be able to lock in a property before other people have even looked at it. That's a win. Another thing to keep in mind if you're a buyer is it seems like you're competing against sellers, but you're not. You're really competing against other buyers. So you win, meaning you get the house that you want at the price and terms that are best for you. You win when you're the first one to make the offer. So having a buyer agent that knows what you're looking for, having a good line of communication between you and your buyer agent, that'll help you get into places before other people who have a little bit more of a scattered approach or a little more of a lackadaisical approach. You're gonna win. I don't ever want anybody to lose. If I have a buyer client, I want them to get the house. And the team here at Greenlight Real Estate, same thing. We want our buyer clients to get into the house. And sometimes that means, foot on the gas. We might need to go and look at a place, this weekend instead of next weekend. But let's get in, let's either cross it off the list, or let's, if it's a good fit, maybe schedule a second showing. Maybe it's time to make an offer. Maybe it's just time to have a strategy meeting. But let's keep it moving so that we're just a step ahead of other buyers. One question that we get asked all the time whenever we're working with buyers is, what are we gonna have to offer? What'll it take to buy the house? What should we offer? And then like the flip side of that on the selling side is, okay, if we're on the market at this price, what do you think we're gonna get? Okay, this is really interesting. In 2024, the median sale to list price, so right, I'm taking the final sale price and I'm comparing it to what the original list price was. In 2024, the median was 100%, meaning basically people were getting their asking price. 2025, something different happened. In 2025, that number dipped below 100% for the first time in many years. And what we're seeing now is that on average, homes are selling for a little bit less than their asking price. What does that mean? It means if you're a buyer, you're probably looking at the asking price and saying, that's probably what I'll have to pay for it. I might not even have to pay that high, but I'm probably not gonna have to pay 5, 10, 20% more than that. So you get a little bit more clarity, you get a little bit more certainty. If you're pre-approved for 500, you can look at homes that are asking price of 500,000 and you're in good standing to be able to make a solid offer and get your offer accepted. On the selling side, and sometimes buyers think sellers are their enemy, again, they're not. The sellers are probably buying something too. So it's helpful on the seller's side to know, okay, if I'm listing my house at 500, I'm probably gonna be able to get around 500. As long as I priced it right, as long as I use good data to back that pricing and the comparable sales suggest that that's the right market price, I'm probably gonna get that 500,000, which means I can, with a pretty high degree of certainty, start looking at properties based on a sale price of 500 on my house. What the market has done is it's removed a lot of the who knows how much the homes will sell for. Now, I kind of know what it'll sell for. I can make my financial planning, I can get my pre-approval, I can really get my home search honed in a little bit more than I was able to before. It's kind of turned the temperature down on the housing market in a good way. I'm sorry, but if you hear people talking about there's no listings, there's nothing on the market, it's just wrong. The number of new listings went up 13% last year. That's a real number. That's a real big number. Those are real new houses that are on the market. The inventory's there. And look, it's not all puppy dogs and rainbows in the real estate market. We actually saw the number of expired listings go up by 34%. So it means 34% more of the listings expired in 2025 than 2024. Expired listings, if you're new to it, that just means it was listed, it didn't sell. The overall number isn't very big. It's only a couple hundred listings that expired. But what it means is kind of interesting. Probably what that means is the property wasn't priced correctly. The price was priced just a little bit too high, and that would be because it's hard to see the trend that you're on when you're on the trend. The trend that we were on last year was stagnating prices, but it still felt to a lot of sellers like prices were going up. That's what they were hearing, that's what they were thinking, that's what they were being told. The data as it was unfolding during the year painted a different picture. So if you were a seller that thought prices were going up, and you're in a market where prices were going flat, you saw this difference. This difference in price is where houses tend to expire. The truth of the matter is, a home is worth what a buyer and seller agree it's worth. It's not worth what a seller thinks it's worth. It's not worth what a buyer thinks it's worth. It's certainly not what the town thinks it's worth. It's not what the real estate agent thinks it's worth. It's not even worth what the appraiser thinks it's worth. It's worth what the buyer and the seller agree that it's worth. I went a little nerdy on this one, but I wanted to know, because I had buyers and sellers asking for this information, I wanted to know in different price bands across the different towns. So in $200,000 price bands for the different towns, what was the market activity like? How many homes were there that sold in these 3 counties between 0 and 200,000? Between 200 and 400, 400, 600, and you get the idea. The truth of the matter is that when you put it all into those 3 counties, you get a pretty good mix of sales. It doesn't follow exactly a normal distribution, but it's a pretty reasonable curve. The problem is that town by town, it doesn't behave that way. That's why, again, local agent is your best advantage, whether you're a buyer or whether you're a seller. Each town, each price band behaves a little bit differently. It's really going to be beneficial to know what to expect in your little cell on the spreadsheet, to know what sort of offer strategy, what sort of level of competition you're likely to face as a buyer, what sort of pricing strategy you would want to use as a seller, what sort of prospects for multiple offers you might expect as a seller. All of that is unpacked. All of that is scratched off once you get into that detail. That's the level of granular town by town price range data that'll really give you a leg up over your competition, and so you can have a successful home search and or a successful home sale. If you're looking to find out how people are buying homes and using financing, keep watching, because we looked, as you know, town by town across these counties to see how the different towns' markets are performing, how people are buying homes, what financing they're using. And here's what it looks like. People are using conventional financing. People are using low down payment financing. For those, think rural development, VA, FHA, VHFA. Those are the 0 to 3.5% down. And people are using cash. But remember, only about 25% of those sales are cash. So 75% of the sales are being financed, and a big chunk of that is conventional financing. People are getting loans. Sellers are accepting financed offers. Offers with financing are closing. People are buying homes with loans. I realize that with all this data, it might sound like I'm suggesting, here's a good time to buy, here's a good time to sell, here's the strategy, here's the strategy. The truth is that the right time to buy and the right time to sell is whenever it's the right time for you to buy and right time for you to sell. Timing the market, trying to predict what prices will be like next year, what days on market will look like this year, is now the time to buy, is now the time to sell, based on economic data, based on sales data. That's not the way to do it. The way to do it is when it's the right time for you, armed with all the information that's available, it's the right time for you. And if you thought this video was helpful, subscribe to our channel for more in-depth, hyper-local Vermont market updates.